sounds good.
The exit is that one.
Please pay attention to the following announcement. As in the event of an emergency, it will determine the effectiveness of your response. Welcome to Hyatt Regency Trinidad. The following is a brief description of the hotel's evacuation guidelines. Should it become necessary to evacuate the hotel, you will be notified by a continuous siren, followed by an audible instruction to evacuate the building. Upon hearing the "May I have your attention, please" over the intercom, you should proceed orderly to the exit closest to you and make your way to the muster point to the car park located on Dock Road. An emergency response officer from Hyatt will assist you in evacuating. Once outside, conduct a head count for your group to be sure that no one is left inside. Should you believe someone is missing, notify the security officer stationed in your area. Do not go back into the building for any reason until the fire service has given the all clear. Thank you, ladies and gentlemen, and do enjoy your time at the Hyatt.
Okay. All right. It is my great pleasure to welcome Her Excellency Carla Hogan-Rufels, the High Commissioner of Canada, all the directors and employees of Touchstone, and all the ladies and gentlemen and distinguished guests here today for the Touchstone Explorations Inc. Annual General Meeting of Shareholders. I'll ask that this General Meeting of Shareholders come to order. My name is John Wright. I'm the Chairman of the Board of Directors of Touchstone Exploration Inc., and it's my responsibility and privilege to chair today's meeting. On behalf of the company, I once again welcome you to this meeting of shareholders. Before we proceed with the formal business of today's meeting, I'd like to introduce the directors of Touchstone who are present here today, which is all of the directors of Touchstone. I would like to ask each director to stand as I call his name. And we'll start with Kenneth McKinnon. Mr. McKinnon is a partner of Citrus Capital Partners Limited since January 2014. Previous to his current role, he was Director of Lightstream Resources from October 2009 to December 2016, and he held the position of Chairman from May 2011 through December 2016. Ken has also been a Director of predecessor companies at Touchstone since 2000. Mr. Peter Nicol. Mr. Nicol has over 30 years of oil and gas experience in both our industry and in finance. He was previously a partner at GMP Securities Europe and co-head of the London office of Touchstone Capital as the head of oil and gas research. Mr. Nicol has also held other positions, including Global Sector Director of Oil and Gas Research at ABN AMRO Bank N.V. and head of the European Oil and Gas Research at Goldman Sachs Group. Mr. Stanley Smith. Mr. Smith is a chartered professional accountant with over 39 years of experience in public accounting. He most recently was an audit partner with KPMG LLP. Mr. Smith's focus of practice was public company auditing and advising primarily in the oil and gas exploration and production and services industries. Mr. Thomas E. Valentine. Mr. Valentine is a senior partner of Norton Rose Fulbright Canada LLP, a national law firm in Canada and a member of the global Norton Rose Fulbright Group. Mr. Valentine has 30 years experience in the oil and gas industry, both as a barrister and as a solicitor. His focus is on international energy projects with an emphasis on upstream operations. We have Dr. Harry Vredenberg. Dr. Vredenberg is a professor of strategy and the Suncor Energy Chair in Strategy and Sustainability at the Haskayne School of Business at the University of Calgary, where he has been on the faculty since 1989, prior to which he taught at McGill University. He is also the academic director of the Global Energy Executives MBA, a degree offered jointly by the University of Calgary and HIS Cambridge Research Associates. He also holds an appointment as an international research fellow at Oxford University's Sadie Business School in the UK. And finally, Mr. Paul Bay, who we will hear from later and has the great advantage of not having to follow a script through the rest of this meeting as I do, and we'll look forward to Paul's remarks as we go forward. So, in accordance with the bylaws of the company, I will preside as chairman of this meeting, and I hereby appoint Mr. Tom Valentine of Norton Rose Fulbright LLP to act as the secretary for the meeting. And unless there is an objection, I appoint Mr. Simon Law of Computershare Trust Company of Canada to act as the scrutineer for the meeting. The notice and access notification and a form of proxy were mailed to all registered shareholders on May 8, 2018. The declaration of mailing is available for inspection by any shareholder, and I ask that the Secretary file a copy of the declaration of mailing with the minutes of today's meeting. Quorum of shareholders is present for the transaction of businesses at this meeting if at least 2 persons are presented in proxy or in person holding or representing not less than 10% of the shares entitled to vote at the meeting. I've been advised by the scrutineer that there are 3 shareholders present today, either in person or by proxy, representing 52,277,518 shares, which is 40.5% of the issued and outstanding shares of Touchstone. Accordingly, we have a quorum present. The scrutineer's report is available for inspection with any shareholder, and I'd like the Secretary to file a copy of such with the minutes of today's meeting. With that said, I declare the meeting open. We've been regularly called and properly constituted for the transaction of business. We have a number of business items to deal with today, and a full description of each matter has been provided in the company's management information circular dated May the 3rd, 2018, copies of which are available online. In the interest of time, I do not propose to make a detailed presentation of each item. You're welcome for that. For the purpose of moving the meeting along, shareholders who are representatives of Touchstone have been asked to move and second the motions to be brought before the meeting. And unless otherwise requested, each of the matters of business to be covered today will be voted on by way of ballot, other than the fixing of the number of directors to be elected and the appointment of auditors, which will be voted on by a show of hands. If you did not receive a ballot but think that you should have, please raise your hand and the scrutineer will attend to you. Okay. If you are a shareholder who holds shares through a broker and you submitted a form of proxy or voting information form prior to the deadline, your vote has already been counted. In order to deal with the matters of business in an efficient manner, the scrutineer has distributed and collected the ballots at the registration table. To facilitate matters, if you're a registered shareholder or proxy holder and you've not received a ballot or you haven't provided the scrutineer with your ballot, can you please raise your hand? Okay. So at the conclusion of this formal business, we will have a presentation relating to the operations of Touchstone from the company's senior management. So please hold your questions till that time. The first item of business is the presentation of the audited financial statements for the year ended December 31st, 2017, together with the report of the auditors. Financial statements were mailed to all shareholders requesting them, and I do not propose to read them at today's meeting. Are there any questions on the financial statements or the auditor's report? I declare then that the audited financial statements for the company for the year ended December 31st, 2017, together with the report of the auditors thereon, have been received. The next item of business is to fix the number of directors to be elected at this meeting at 7. I ask that the shareholder move the resolution fixing the number of directors to be elected at 7.
Mr. Chairman, I move that the number of directors to be elected at this meeting be set at 7.
Thank you, Joseph. Is there a seconder?
Mr. Chairman, I second the motion.
Thank you, Jill. Is there any discussion on the amendment? All those in favor of this resolution, please signify by raising their hands. Contrary, if any? Thank you. I declare the motion passed. Carried. Next item of business is the election of directors. The number of directors to be elected at this meeting has been fixed at 7. I note that the Board of Directors has implemented an advance notice bylaw, and pursuant to this bylaw, advance notice would be required to be given to the company regarding any proposed director nominees not included in the circular. I can report that no such notice was received by the company. I further note that we will be nominating and approving individual directors and not a slate of directors. I will now receive a nomination or nominations for the election of directors to hold office until the close of the next annual meeting of shareholders or until their successors are duly elected or appointed.
Mr. Chairman, I nominate the following for election as directors of the company: Paul R. Bay, Kenneth R. McKinnon, Peter Nicol, Stanley T. Smith, Thomas E. Valentine, Dr. Harry Redenberg, and John D. Wright.
Thank you, Gail. There are no further nominations, and I declare the nominations closed. I'll now ask for someone to move the resolution electing the nominees as directors of the company to serve as directors until the close of the next annual meeting of shareholders or until their successors are elected or appointed.
Mr. Chairman, I move that that each of the 7 persons nominated be elected as directors of the company to hold office until the close of the next annual meeting of shareholders or until their successors are duly elected or appointed.
Thank you, Jill. Is there a seconder?
Mr. Chairman, I second the motion.
Thank you, Joseph. Is there any discussion? As previously stated, the directors will be elected individually and not as a slate. For a nominee to be selected, the votes cast in favor of the election of a nominee should represent no less than a majority of the shares represented in person or by proxy at this meeting. Voting on the election of directors has been conducted by way of ballot, and the scrutineer is tabulating the final results. However, I am advised by the scrutineers that proxies representing more than 50% of the shares represented at the meeting have voted for the election of directors. Therefore, I declare that the motion is carried. The next item of business is the appointment of auditors. Unless there are any questions, I will now ask for someone to move the resolution appointing Ernst & Young LLP Professional Chartered Accountants as auditors of the company for the current year.
Mr. Chairman, I move that Ernst & Young LLP be appointed auditors of the company to hold office until the close of the next annual meeting of shareholders or until their successor is appointed, at such remuneration as may be determined by the Board of Directors, and that the Board of Directors be authorized to fix such remuneration.
Thank you, Joseph. Is there a seconder?
Mr. Chairman, I second the motion.
Thank you, Jill. Is there any discussion? All those in favor of this resolution, please signify by raising their hands. Contrary, if any? I declare the motion carried. The next item of business is the approval of the unallocated options, rights, and other entitlements under the stock option plan of the company. The full text of this resolution is set forth on page 8 of the information circular dated May 3rd, 2018. To be effective, the resolution approving the unallocated options, rights, and other entitlements under the stock option plan must be passed by majority votes cast by the shareholders present in person or by proxy at this meeting. Unless there are any questions, I'll now ask for someone to move the ordinary resolution approving the unallocated entitlements.
Mr. Chairman, I move that the resolution approving all unallocated options, rights, and other entitlements under the company's stock option plan, as more fully described on page 8 of the information circulated dated May 3rd, 2018, be approved.
Thank you, Jill. Is there a report seconder?
Mr. Chairman, I second the motion.
Thank you, Joseph. Is there any discussion? Voting on the approval of the unallocated options has been conducted by way of ballot, and scrutineers tabulating the final results. However, I am advised by the scrutineer that proxies representing more than 50% of the shares represented at the meeting have voted for approval of this resolution. Therefore, I declare that the motion is carried. Next item of business is the reconfirmation of the shareholder rights plan of the company. The full text of the resolution is set forth on page 9 of the information circular dated May 3rd, 2018. To be effective, the resolution reconverting the shareholder rights plan must be passed by a majority of votes cast by the shareholders present in person or by proxy at this meeting. Do I have a motion?
Mr. Chairman, I move that the resolution confirming the existing shareholder rights plan of the company, as more fully described on page 9 of the information circular dated May 3rd, 2018, be approved.
Thank you, Joseph. Is there a seconder?
Mr. Chairman, I second the motion.
Thank you, Jill. Is there any discussion? Voting on the reconfirmation of the shareholders' rights plan has been conducted by way of ballot, and the scrutineers tabulating the final results. However, I'm advised by the scrutineer that proxies representing more than 50% of the shares represented at the meeting have voted for approval of the resolution, and therefore I declare the motion is carried. That now concludes the formal business of this annual general meeting of shareholders. Is there any further business? Okay, as indicated, following the conclusion of the meeting, the company will be providing a short presentation relating to its business, and at this time, I'd ask for a motion to conclude the meeting.
Mr. Chairman, I move that the meeting be concluded.
Someone second the motion?
Mr. Chairman, I second the motion.
Thank you, Joseph. All those in favor of this motion, please signify by raising their hand. Contrary? There. I declare the motion carried and the meeting concluded. And I'm now going to turn the meeting over to Paul Bay, who's going to provide an update on the company's operations. I encourage you to ask him all the tough questions you have. And we'll find out how we're doing. Thanks, Paul.
Thanks, John.
Welcome everybody this morning, and thank you, John. Welcome the High Commissioner, distinguished guests, board of directors, all those people that are watching us online, and all the people that have come from both the Calgary office and the Faisabat office to join us here today. It really is a special day for us today, and a real honor. It's been almost 8 years since we started, and the plan was and still is to be the largest and most profitable onshore producer in Trinidad. We started with a single property in WD8, around 130 barrels a day, and since that time we've had a 13-fold increase in our production, and we currently have 20 blocks, 20 properties onshore. We think we're probably ranked number 4. Depending on how you want to do that. It's always dangerous when there's other producers in the room to do that. But, in the top 4, but we're still planning on getting to number 1 on offshore. There's been many changes and challenges along the way. We had $28 oil, which was certainly a challenge. We've been through 3 governments now. We've had the worldwide financial crisis, and I would say a couple of minor shuffles at Petrotrin since we've been involved here over the last 8 years. During those 8 years, we spent $71 million US, excluding acquisitions that we've done. We've drilled approximately 45 wells, and we've done about 84 recompletions today. So I think we've been very active, certainly onshore. This morning, what I'd like to do is give you a glimpse into where we've come from, where we think we're going, and I think most importantly for the shareholders is how we're going to get there. I'm going to share the presentation with Scott Buda, who's our CFO. He'll walk through some of the numbers, and James Shipka, our COO, who will provide you with some insight on the exploration and operations. A couple of days ago, we put out a press release in RNS in London that asked people to access our social media for some questions, and we do have a number of questions that I'll answer afterwards. A bunch of them will get offered up in the presentation as well. But I think before we go sort of to, let me just see here. What button have we got here? You know which one moves it forward? Let's try. There we go. All good. So let's just talk first of all about, I think what we've entered now is a very, very busy period, a very active period for operations in the field. It includes well optimization, it includes recompletions, and for the first time in the company's history, we now have a continuous drilling program where we're basically drilling wells back to back. And all this is for what we refer to as value creation, and that's really the driver for us. But I think it's important to define value creation because it gets defined in a bunch of different ways. As a public company, share price is probably the easiest way to define value creation. But in order to have true long-term share appreciation, one thing that we think you need to have is fundamental basics within the business and a disciplined financial guideline. And I can tell you with Scott looking over our shoulder, discipline is a capital D. We believe these principles are critical in us being able to weather a bunch of storms that come along. You know, the recent low oil prices, we were able to get through that. Although we did some restructuring, we didn't have to do any of that restructuring on the back of our lenders or on any of our suppliers. We were able to keep all of them whole as we move forward. Specifically, we'd like to thank Crown Capital out of Toronto, who's our lender, in the belief in the assets that we had here. They never wavered in that support, and it was very helpful for us to get through that last very difficult time. We've also cultivated positive long-term relationships with the Trinidad government, Petrotrin, and the suppliers. All of these combined has allowed us to commence, and as I mentioned, a very aggressive capital program. With regards to our assets, we now have 20 blocks and some 208 identified drilling locations. To put that in perspective, we're targeting a program that would see us drill about 20 wells a year starting next year. That means we have about a 10-year drilling inventory right now in front of us. So we've really set this solid base for us when we look forward in this project. As I mentioned, the program's commenced this year. We'll have 10 wells drilled this year, probably done most of those wells by the end of the summer. And then as we go forward, the one challenge that we will have is how we operate with the government Petrotrain on a continual program. Some of the rules that are in place, for instance, a well license that is only good for 3 months, makes it difficult for us to plan a long-term program. But those are fairly minor things that we can continue to improve upon. Today, for the first time, we're also going to unveil plans for an exploration component of our onshore drilling program. It's a program that will focus both on oil and natural gas opportunities, and it's going to look for very large reserves onshore in Trinidad. These are world-class large reserves. These are some of the most exciting opportunities that I've seen in my 30-year career. Let me back up though just for a second. I want to have you take a look at where we've sort of come from in the last 7 years from where we're at. Just talk a little bit about the oil price. This is basically the oil price since we've been in the business here, and it's gone from $110 to roughly, under $30 a barrel while we've been here. There's lots of different theories around the world, whether you watch Fox or CNN or whatever the case is. But I think as an economist by training, it really is a classic case and a fairly simple case of supply and demand. We experienced that vicious decline in pricing as a result of a very large increase in worldwide production. We saw oversupply that included some of the shale oil in the United States. And in this graph, what you can basically see is that shaded area between those two bars is really supply-demand that we saw come into place. It resulted in that decline in price really resulted in a dramatic drawback of capital being spent all the way around the world, especially on long-term major projects. And so what we started to see is that wash through the market. We also then saw Russia and OPEC get together on curtailing production. And you can see where we really started to see that supply-demand starting to tighten up as we move forward. In the last little while, there's been talk about opening up some more of that supply to make sure that we don't be undersupplied. We think that's probably a good idea in the long term. And the growth onshore in the United States, I think it's going to be fairly significant, but when you look at it in the overall picture, it doesn't really move the needle very much in our view on a worldwide basis. So we believe that long term there's some great opportunities, but on top of that, I think the more interesting side is on the demand side. When you look at the demand side, we're roughly running about 98 million barrels a day right now of demand. And depending on population growth and which curve you want to use, you look out 20, 30 years, we're looking at a number that's around somewhere on the low side of 115 million barrels to 146 million barrels a day. Those numbers really are staggering when you think that that means our industry is going to have to find about 50% more production on a daily basis than what we're producing right now to meet demand after declines. So it's pretty big numbers when we look at that going forward. With the capital budgets that have been cut over the last couple of years, I think it sets up for some really nice base pricing for us over the next couple of years. The other thing that's going to be really interesting this year, it's a milestone year for our industry. It'll be the first year that we go through 100 million barrels a day of demand. And on the other side of the equation, it'll also be the first year that we go through 100 million vehicles of car sales for the year, which again are just mind-boggling numbers when you think about the consumption that goes on the back of that. So what do we see from all of that? I think what we see is an industry that's certainly going to be in place for the next 20 years, a product that's going to be in demand. We think that technology is going to drive a lot of these prices lower. We're not expecting to see $200 oil. But I think what it allows us to do is put together a very solid business model as we go forward. So let me now provide you with some insight into our operating philosophy as we go forward. Starting with people and culture. All of our staff in Trinidad are local. We have no expats here on the ground. During the oil price downturn, we not only flattened our organization, we actually crushed it. We just wiped it out entirely, dumped the whole box upside down. It provided two major changes for us. First, it gave the opportunity for the local talent, and a lot of that trained here, to really step up and take on the challenge and come up with ideas that they had. Secondly, it changed the communication lines in the organization from one that was very hierarchical to one that is now very collaborative, where you can talk to anybody you want in the organization and not get into trouble from top down. It really is this open exchange of information. And I must say, the results, I would like to say there was a master plan, and the master plan was to reduce costs, but the fallout of it was, it far exceeded our expectations in the way we now communicate within the organization. It's also allowed us to implement an active community support system that's driven from the bottom up, so the employees tell us where they think we should make the contributions, as opposed to us forcing something down from the top. Touchstone has all its reserves and productions based in Trinidad. As you've seen in our latest financial statements, more than 100% of our cash flow is directed back into development in Trinidad. Our focused approach has resulted in year-to-date production growth of over 40%, almost 50%, to where we're currently at about 1,800 barrels a day. And we're still reducing our operating costs and improving our capital efficiencies as part of that. This is all credit to the Touchstone team here in Trinidad as well as in Calgary, and also our suppliers who have worked with us along the way at lowering costs and increasing efficiencies. It's really been a collaborative approach. On the financial front, we made some transformational changes. We listed on AIM in London in June. I guess it was almost a year ago in a couple of weeks. The dual listing with Toronto allowed us to access the required capital we needed to go forward and drill this continuing program. And quite frankly, right now, if we had more capital requirements, we could raise more money. So for us, it's a real opportunity for us to high-grade our prospects. And it's also given us an opportunity to go into some other areas of exploration that we wouldn't have been able to look at a year ago. Just take a look at our stock quickly, since we've done, since that's an annual meeting, and I think it is a good measure of value. When you look at our stock performance compared to our peer group in the first year, we're satisfied that our business model is producing the results that we wanted. We've both outperformed the overall market on AIM, but we've also outperformed our peer group pretty dramatically. All in all, it's been a busy year, and what I'd like to do is maybe have Scott step up and run through some of the numbers for us. That button pushes you forward.
Thank you, Paul. Thank you, everybody, for joining us today. Just want to take a couple minutes to discuss our financial state, and before I'll introduce James, who will speak more on the exciting topic of our current development and future exploration plans. I only have 3 slides Paul gave me today, so I won't take too long, although he did make the room hot, so we'll see. If you grab coffee, I will not be offended at all. If we do look at the numbers, from a financial perspective, 2017 was a transformational year. I think I can echo Paul and James' sentiments with that, both operationally and from a financial perspective. If I look back on 2015 and 2016, we really, much like all of our peers, had to curtail development, sit back, take a look at our business, take a look at our operating structure, our capital structure, and Paul touched on it briefly. We really took a look from Calgary, kind of stripped out the management level, and really I feel that we, of course, achieved cost efficiencies, but we also empowered our Trinidad, our local employees, which in turn created capital efficiencies. We also, and Paul mentioned that Crown Capital, we'd like to thank them for belief in both management and the assets, and we did restructure our financing in 2016. And that allowed us to drill 4 wells in 2017, which James will touch on. And those wells really did create the bulk of the increase in our revenues, funds flows, earnings from a quarter-over-quarter perspective in 2018 and 2017. In order to accelerate our growth, though, we only really had the capital for 4 wells. We realized that a broader access to investors was needed. We, in response to that, we listed on the AIM market of the London Stock Exchange, and this listing really gave us more access to a broader investor market. And from that, we had 2 raises, one in June last year and December last year, which really now lets us have a 2018 continual drilling program. James will discuss that drilling program. We have drilled 2 wells in Q1 of 2018 and further 3 wells on a year-to-date basis. One well was on stream in Q1 2018, but James will discuss that. We'll see the actual efficiencies and the increase in funds flow as we move forward throughout the year. The increase in liquidity did increase our common shares outstanding, which in turn increased market cap, working capital, and cash. Moving on to our operational netbacks, if we take a look over the past 5 quarters, things have more or less increased. Production has increased based on increased capital expenditures and field efficiencies. We were happy to have an increased world oil pricing, which of course increases our petroleum sales and increases our royalties paid to both Petrotrin and the ministry. From an operating cost basis, we are striving to continually create efficiencies. These numbers are slightly misleading because they are translated into Canadian dollars, so the FX on the US will kind of make it a little choppy. If I look at a US dollar basis, our 2017 annual operating expenses were $18 a barrel. That has decreased to $16 per barrel in Q1 2018. We think that there is more room to grow or to decrease those costs, partially because 50% of our operating costs are fixed. As James increases the production, that will be allocated over a broader, over a fixed cost base, and we should drive operating costs down below our target of US $15 per barrel or lower. Finally, to be a good CFO, I would be remiss not to speak about SBT. I've been speaking about it for 4 years, and I'm slightly tired of it. But as a refresher, SBT is an 18% tax on revenue less royalties. It's calculated quarterly, and it's only in effect when our realized prices are $50, US $50 or more. What that really does is create a zone, we like to call it the red zone, whereas world oil prices increase or realized prices increase, we make less money. So you can imagine when I'm in London or Toronto talking to an investor who is investing in oil and gas, and I have to tell them that we make less money as oil increases. He looks at me blankly and I do not have a response. There is an ITC, there is an investment tax credit that is in part to incentive drilling, I guess. And if I take a look at this example, we drill 3 wells using our Q1 numbers. The band does decrease the red zone, so it's only a $5 band if we drill compared to a $12 band of lower prices if we don't. The problem is for a junior oil and gas company, if you take a look at this, we've got to drill 24 wells in order to have 0 SBT. That is tough to do with our current capital structure, with our current challenges with Petrotrin and the ministry to get licensing. We will try our best, and that is our ultimate goal, but it really does limit us in current capital expenditures as we move forward. So instead of me complaining, I guess, what do we do about it? The first step is the government realizes there's a problem. They've stated that this needs to be reformed and that it should happen sooner than later. The problem is this has been deferred and talked about for 4 years. There's really I have no sense of when it's going to happen. From a CFO perspective, it's hard for me to budget any capital expenditures. It's hard for me to talk to my banks to access more finance when I don't know if this tax is going to increase or decrease. From a capital markets perspective, it just creates uncertainty for me, for our management team, for our company, and for Trinidad in general. I feel that there has to be a way that Trinidad can focus on near-term revenue budgets and long-term budgets. If we take that excess capital, drill it, pay more royalties, pay more petroleum taxes on the other end, and also not to mention the downstream taxes that will occur going forward. But with that, I'll step off my soapbox and pass over to James, who will speak about our exploration opportunities and our current development. Yeah, thanks, James.
Well, thank you, Scott. Thank you, everyone, for joining us here this morning. As CEO of Touchstone, I'm going to reiterate something I think everyone has said, that 2017 really was a transformational year for the company. And the past 12 months have honestly been the busiest and most rewarding, I think, that we've had in the company's short history. We've been able to put together a significant land position here in Trinidad. We have access to nearly 64,000 working interest acres at this point in time. This is a combination of joint ventures with Petrotrin, private lands, and exploration licenses with the Ministry of Energy here. Today I'll give you a brief rundown on the activities that we've done on the development acreage, and we'll provide you with a little bit of a sneak peek of the opportunities we've identified on the Oracle exploration block, which, as Paula said, has become a significant focus for us in the future. Last May, we really hit the ground running with our drilling campaign. We executed a 4-well program starting in May. We drilled 2 wells on the Kura 1 block and another 2 wells on the WD 4 block. This January, we kicked off our 2018 drilling program. To date, we've drilled 5 wells. I'm pleased to say we'll be spudding our 6th well later this evening or early tomorrow morning. And we are on track to drill a full 10 wells this year, hopefully by the end of Q3, beginning of Q4. Our next 2 wells will be drilled on the will be drilled on the Kura 1 block, following up on our 2017 program there, followed by a 3rd location on our WD8 block. So in the last 12 months, 9 wells drilled, 7 of those are on production right now. 2 of those wells are coming on production in the coming days. We'll touch on that in a few minutes. And we've got a little bit of a saying at Touchstone. Touchstone, the good things happen when you drill. So let's take a look at some of those good things and the result of what our drilling programs brought us. Starting with reserves, 2017 was the 7th consecutive year of positive reserves growth for the company. We had a 20% increase in our total proved reserves versus the prior year, and this really was as a result of the success of the 4 wells we drilled, and as a result of the low decline of our base production, which has actually exceeded all of our expectations. With respect to capital efficiencies, you can see that on a total proved basis, our finding costs are a very competitive $7.66 Canadian, or just under $5.90 US per barrel, which results in a recycle ratio of 2.9 times last year. Corporately, we strive to exceed 1.5 to 2 times, so this is well over our expectation, and we're hoping to be repeating this in the future. And finally, in 2018, we're drilling 10 wells, as we've said a few times. That's 15% of our booked total proved drilling inventory. So this year will be a significant step above 2017 with respect to activity, and I'm looking forward to being able to present you our reserve report next year. What everyone's really interested in, the metric that most people want to see that's come as a result of the drilling program, is production. This graph is production from January 2017, when we were just under 1,300 barrels a day, through June 6th of this year, where our last week's production averaged over 1,820 barrels a day. Our production has grown by 42% over this period, and obviously we're excited about the potential growth we're going to see here in the future as we move towards our kind of initial goal of 2,000 barrels a day and then moving beyond. I'll just explain this graph a little bit because it really does detail the way we look at production and where we're seeing our growth. We look at production in 4 key categories: our swab production, our base production, our recompletions, and our new wells. Swab production, the dark line on the bottom of this graph, it's about 10% of our total production, and these are low-cost volumes that vary both in quantity and number of wells we access on a daily basis. We have 3 or 4 swab trucks in the field every day, and we're continuously looking to optimize and expand this very capital-efficient program. Our base production, the light green line, that's our low decline volumes that come from our legacy wells, and the recompletions above that is a very capital efficient program where we're adding perforations, we're adding new zones to these legacy wells to increase production and optimize them. We strive to do 24 wells, 24 recompletions a year. We are on track to do that this year. And then obviously the most interesting thing on this graph that everyone's looking at is the new drills from 2017 and 2018, which have brought our volumes up significantly since this time last year. So let's look at those in a little bit more detail. Looking at these, you can see the 2017 program continues to exceed expectations. We're nearly a month into production from these wells, and the 4 wells combined are doing, as of June 6th, about 340 barrels a day. One of the 4 wells, PS 599, is not included in that total. We had a hole in the tubing there that we just got repaired actually yesterday. That will contribute another 50 barrels a day of production, bringing those 4 wells a year after being put on stream to nearly 400 barrels a day of production. Again, putting this into context, over the last 11 months, these 4 wells on their own have produced 106,000 barrels. It's 20% of our total volume. For 2018, the drilling results are still coming in. We've drilled 5 wells. 3 of them have been on production for longer than a month. 2 of them are just coming on. The first well we drilled, PS 602, is right on the expected production curve. FR 1792, the dark green wedge that looks so dramatic there at the end, is a pleasant surprise, obviously exceeding expectations. Its neighbor, FR 1793, is also slightly ahead of the curve. I temper my enthusiasm on those 4 wells. We have about 5 weeks of production on them, and both of those wells are currently flowing. 1792 is flowing up 7-inch casing, 1793 is flowing up tubing. Both of those wells will need to be put to pump at some time in the near future, and that's when we'll really see the stabilized production rates. But at this point in time, they are our pleasant surprises to our program. Final 2 wells of the year that we've drilled to date, CO 370 and 371, will be on production here in the next few days. Happy to say that we actually completed PS 371 this morning about 4:45, and that well's currently flowing back load fluid, so we'll see what happens once we recover that load. And we'll look to, as is our policy, we will look to give these wells 30 or 60 days before we give the market an update on their actual performance. You can see from this graph, the first few weeks it actually has some fairly dramatic production associated with it before they stabilize, and we think the correct thing to do with keeping folks informed is to really look at that stabilized production. So you'll see something from the company probably in August reflecting the performance of all of these wells. Another component equally as important to us as production and reserves is our satisfaction of our minimum work obligations with our partner Petrotrin. At this point in time, we are current with all of our drilling and minimum work obligations on our lease operating blocks with Petrotrin. And with the next WD8 well to be drilled, which would be drilled probably in about 6 weeks, that will make us completely up to date with all of our obligations through the year 2020 on our lease operating agreements. On our farm out or farm in blocks, depending on your perspective, we are current with all of our obligations there. And we do have 2 outstanding obligations on our exploration blocks that we are in the process of addressing. We are in the environmental permitting stage on both the Oratois and the East Brighton blocks, with an eye to drilling on these blocks in 2019. And before we take a look back, I want to take a brief moment just to kind of show you Touchstone's level of activity compared to our peers. This is based, the dark red or no bars on this graph are based on the publicly available information from the Ministry of Energy for the first quarter. As you can see, we are the most active driller, second or just slightly ahead of Petrotrin. We drilled 1 more well, not quite as many feet. And then PCSL, a privately owned Trinidadian company, is just immediately behind Petrotrin. I'll note, if you're looking at this graph, you're seeing that there's 4 wells drilled in Q1 and 7 wells drilled to date. The ministry includes 2 wells that we drilled on our Faisabad block as part of our water injection program as drills. They don't count towards our 10-well goal of drilling this year, but it will throw off the numbers that you'll see, because ultimately the ministry will show that we drilled 12 wells this year. Those were very shallow, inexpensive wells, but they were part of our monitoring program. So to date, we've drilled almost 25,000 feet with our 5 or 7 wells, depending on how you look at it. And by the end of the year, with our full 10 development well program, we'll be at over 50,000 feet, and we should be the most active operator on the island. And also note, when you look across the company, outside of drilling, we are one of the most active operators. Last year, we had just over 500,000, 546,661 person hours of work in the field. This is our staff, our consultants, and all the folks on the ground here. So we are very active relative to our peers and continue to try to excel and lead the way in a variety of ways that Paul will talk about here after I'm done. Looking forward, I'm excited to give you possibly an overhype based on Paul's introduction and Scott's introduction, because this is just a little tease for you of some of the work that we've been able to identify and some truly transformational opportunities on the Oratois exploration block. We've spent the last 3 years on the ground on this block, looking at seismic, looking at wells, speaking to some other folks. And at this point in time, the team has identified 5 significant prospects on this block, based on seismic interpretation, evaluation, and the comparison to offsetting wells. 3 of these prospects are within the prolific Herrera Fairway, which runs, you can see it in yellow on the map, runs from the southeast or from the north, backwards is awful. The Herrera Fairway runs east to west, big fairway. Everyone here knows about it. This is exciting because it really is defined by two different prospects. You've got the Carapel Ridge Field, which is a 500 BCF liquids-rich gas play to the southwest, and it moves up to Balata East, which is a 10 million barrel oil pool to the northeast. Three of the prospects within that block are targets that we're looking at getting to here in the next year and a half. They're based on seismic. They're based on analogies to these pools. They are oil and gas prospects, and the magnitude of the prize here exceeds both Carapel Ridge and the Balata East field in defined area seismically. These will be between 5,000 feet deep and 12,000 feet deep, anywhere between 1,000 and 2,000 potential feet of pay. And if successful, will be transformational not only for the Orthwa block, not only for Touchstone, but for Trinidad as well. Two of the prospects, I said there were five, those are the three really exciting ones. The other two are shallower. They are very significant oil prospects, however, offsetting or correlatable to the Catsill and the Vet fields. These are pools that have produced between 30 and 60 million barrels respectively. And similar to the Herrera prospects, these are defined seismically and correlatable to those offsetting pieces of production. In general, the Orthwa block is a very structurally complex but well-defined block. There's a variety of legacy seismic that we have had access to. We've had some of it reprocessed. We're working with some very talented folks here on the ground here as well. And we're using the same approach to it that we've used on our development blocks. We're going to drill a little bit deeper than has been done before. We're going to drill with a little bit different technique, better equipment, less damaging to what is really a very sensitive formation. I mentioned the Herrera. It's a turbidite sequence. In Canada, that would be something we would equate today with the Montney. It's a very low or relatively lower porosity, lower permeability horizon that is very susceptible to damage. And for that reason, a lot of these prospects have been missed in the past. So we're definitely looking forward to getting there. We are on the ground in Orthwa now. We are working with the government on certificates of environmental compliance. And we will be having programs here that you'll see coming forward end of this year, beginning of next year. With that, I'll just leave it to Paul to wrap up.
Thanks very much, James. You know, that block, that Orthwa block really is, it's been exciting from a number of different areas for us. Just before I talk about this next slide, it's been a bit of a history lesson too. There's about 70 some odd wells that were already drilled on that block. And I see a couple of people here from the office down in Faizabad that I suggested should go out and look for these wells, and I didn't say I was going along because when they ordered the snake boots, I decided I was out. And but there was a lot of groundwork done, physical groundwork done out there, and it's really come together with the technical work that we found. You know, some old logs that we were able to uncover. The combination with the seismic, it really is a very, very exciting exploration project for us. And as James mentioned, our target right now would be to move a rig out there, hopefully right near the end of this year or the beginning of next year, and have a continuous 5-well program going out there, starting in January next year. So it's going to be very active. You're going to hear a lot more about it as we go forward. I think one of the other things I just want to touch on before, as I wrap up here, is I want to talk about our social license and the focus that we have on a number of HSE initiatives. And I'm happy to report this year that a couple of them have actually been concluded and successful. At Touchstone, our view on the HSE side is that sometimes the smallest things can make the biggest difference. One example would be the establishment of a water disposal well project that we did at Faizabad. Under the rules and regulations here, produced water can be disposed at surface, and it has been for a very long time. We just don't believe that's the best practice, and so for the last couple of years, we've been trying to put in place a water disposal well. The video you see up here was sort of the old school way of, we would do a cascade system in the tank, and then the water would be released and ultimately end up in the jungle, really. So what we were able to do was identify a well, we converted it to a water disposal well, and because there was no regulations in place, and no one had ever done this before, it took us almost a couple of years to get approval on this. And I must say I lost patience along the road a couple of times, but the HSE department reminded me how important this was, and we just kept pushing forward. Happy to say that the first quarter this year it actually started, and we've been able to put away every bit of fluid from that field. So that fluid now has zero effluent that comes out of it. It's either oil sold or product water pushed back into the ground. And I think the real important thing is there was no economic benefit for us to do this at all. It was just, from our point of view, one of those things that was just the right thing to do. So what we've now done is we've identified a bunch of other wells in other fields, and by the end of 2019, our goal is to have all of our fields on the same basis. The other thing that was certainly a small thing, and if anybody had ever done a field tour with us before, one of the things that was quite striking was the underweight dog population that we saw at all of our battery sites. And we hired a local veterinarian, and with the guidance of one of our consultants down here, the veterinarian went out, rounded up a bunch of dogs, got them healthy, spayed them, and it's been a remarkable program when you look around at the healthy environment that we have there. And again, a very little thing, but we think it's made a big difference to all of our projects down there. So that's on that front. But our number one focus is on safety. It has been since the day we got here. It's all about our workers. Our biggest asset goes into their cars and drives home at the end of the days, or their vans. It's really great that this year we got some more recognition. It's the second year in a row that we've been recognized as one of the outstanding HSE recipients from Petrotren. I should point out something, that a very large portion of our variable pay component is now tied directly to HSE. And that goes all the way up to the executive level and all the way down to the field level. So I think that sort of ultimately shows you the commitment at all levels. And as I discussed earlier, what we do on the donations and social licensing side is we look to our employees to provide us with ideas. And really the question that we put to them is, show us the need, we'll try to come up with the answers and try to come up with the solutions. And for us, it's not just giving money, it's giving time and it's giving ideas. And so a lot of the contributions we make are a combination of time from our employees and money on our side. So all in all, as I say, it's a huge honor for us to be here today. This is a company that's listed in Canada and London, but it really is a Trinidadian company in that this is where everything happens, this is where all our assets are, this is where all our production is. So this is the proper place for us to have our annual meeting. And I appreciate everybody taking the time to be here. And the low-risk drilling program that we have in place is exciting, and the exploration stuff we have is really what I would call world-class onshore. And hopefully we're going to be able to make a difference, as James says, not only to our shareholders, but also to Trinidad as we move forward. So thank you very much, and if there's any questions, why don't we take those? If not, there was only a couple that I saw in here that weren't really specifically covered in the presentation. One is, are there any potential estimates for the exploration upside? And I know James has danced around this a little bit, but really on the exploration upside, what we're looking for is we're looking for those lookalikes to those fields that you see around Portois. We think that that's really the model for what we're looking at. And the production rates on some of these fields are pretty dramatic when you look at them. There are thousands of barrels a day on the oil side, and they're 30, 40 million cubic feet a day on the gas side. So when you look at that compared to the size of the company we are today at 1,800 barrels a day, you can see why we are very excited about that program. And to keep that in perspective, I don't want people to leave the meeting thinking that we're putting all of our eggs into one basket now. This is an exploration company. What's actually going to happen when you look at the numbers, it'll probably be 20 to 25% of our capital program will go to exploration. The other 80% will still go to drilling those 20 or 25 wells on our development blocks where we see production grow. So it gives you kind of an idea of the balance. We're not putting the company at risk by drilling Orthwa. What we're really doing is giving it a step change if we're successful. And if we're not successful, we got some great tax pools for Scott to do something else. So that will work out that'll work out. But I think with the information we have, it's certainly a good program. Talks about what's the 5-year plan. The question is, what is the vision for the company in 5 years? I don't think it's changed at all from when we started. We want to be the largest producer onshore Trinidad. It's really simple. We want to be the most profitable. And I think although there are some private companies, so it's a little hard for us to measure ourselves on the profitability side, we can certainly look at overall volumes and see whether or not, see what we can do on that front. But the 2,000 barrel a day mark that we talked about when we went public in London, it was really a starting point. It was like the initial thing. We need to get over that hurdle. A bunch of stuff changes when you get over 2,000 barrels a day. You know, our G&A ratios start to get into line. Our operating costs come down, as Scott said, it's about 50% fixed on the operating costs. You start to generate enough cash flow to self-fund the program. Like things change dramatically as we get there. But our objective all the way along has been, you know, we still think there's lots of room to get to 5,000 to 10,000 barrels a day onshore Trinidad. When you look historically at the assets in Trinidad, you look at where Petrotrin was, you know, there's a lot of oil here. There's billions of barrels of oil onshore Trinidad, and it's just a matter of getting the right technology, getting the right capital structure to put it in place. And I think we are getting closer and closer to do that. The services are here, the mentality's here, the refinery's here to sell it. You know, a lot of those things that other international companies have to deal with, we don't have to deal with. So we look at that as a huge opportunity. And then the final question I see on here is, there's a question here about insider buying of stock. And I assume that probably comes from, in the last little while, the directors have been fairly active in purchasing stock. We also have a monthly program that officers and employees buy stock, so you'll see those RNSs come out. You know, one of the challenges for us is when you're busy like we are and wells are coming in at significantly high rates, it's difficult that we don't get into a blackout period. So you may see a long period of time when we're not buying any stock, and the reason being is there's probably something going on. We also get blacked out for quarters and year ends. So it's a little bit tricky for us to do that. But having said that, if you look back over the course of the last year and a half, you'll see that officers and directors have significantly increased their stake in this company when you look back. So yeah, we're committed. We're definitely committed. Failure is just not an option for us as this group as we go forward. So that's all the questions that I see here that didn't get answered by the presentation. Does anybody have any other questions? If not, what I would do is suggest we, oh yeah, go ahead, yeah.
I'm Michael. First time to see the presentation. The question is, are you in a position to share from a short-term and medium-term perspective plans to enhance oil recovery, some of the opportunities in country and some of the challenges you've been facing?
I'm going to repeat the question so that anybody that's watching on the web might hear. What are our short or medium-term plans for EOR recovery, and what are some of the challenges for it? Is that a fair answer or a fair question? So we've looked at what we're doing at Faisal with that water disposal well. We are going to monitor all those wells around it to see the effect of putting some water back into the reservoir and take a look at that. So it's maybe a little bit of a science experiment that's good for the environment. But we still think there's a huge amount of potential in just infill drilling before you ever get to the EOR. Like if you look at the oil in place on most of the acreage we have and the recovery factors, they're single digits. They're 8-9%. They should be 15-20%. So we think we're actually still one stage on a lot of our acreage before we even have to go to EOR. And then the other thing that we are looking at, we are doing some studies on EOR, and we've done some studies on some water floods. One of the challenges in Trinidad is just to find water. It's probably one of the biggest challenges, believe it or not. So we're also looking at that side as where we can source the water as you move forward. The other part of it is there is not a lot of clear regulations on how to implement an EOR. And so the government's working on that. You know, they talk about it every year at their conference. We're waiting for some more action on that. We'd like them to deal with the tax issue first. If they want to pick priorities, deal with the tax issue and then go to the EOR thing. And then the other part of it is there's a lot of CO2 on the island, right? You look at all the CO2 that comes off of just about every industrial part on the west side of the island. We think that's a great opportunity down the road for some CO2 flooding. So we're thinking about it. But I have to tell you that I think there's still a huge opportunity at the front end of that curve before we ever get there. Any other questions? If not, thank you very much, and appreciate everybody listening in. I know we've got lunch next door right away, so anybody that can join us for a little bit, that would be great. And again, thank you very much.
Did you get between adding water, adding gas, adding something else into the ground? The water is